Welcome, everybody. I appreciate everybody taking the time to join our webinar today. This is part of our 2024 webinar series, and we're really focusing on this quarter on economic impact, impact analysis. So that's our topic for today. Now, listen, I want to preface this by saying that that's an extremely broad concept. And of course, you know, we focus on workforce development and economic development, and we do research and analysis. But economic impact is typically a part of almost every project that we do. Really, it runs the spectrum. It's anything that really has to do with the dollars and cents and how that's translated either to policy or an implication of policy is often a lot of what we look at. So let me just preface everything I'm going to say with that and understand it's a huge topic and a huge concept and all of those things. So I'll get through as much as I can. We've got a nice little sampling of some past work today. I'll talk about some high-level concepts and sort of an overview. The other thing I would like to mention really right off the bat is maybe somebody was here earlier and heard me say I'm not great at multitasking, monitoring the chat and running the screen and talking at the same time. But I do have my chat open. So please, at any point, if anybody has a question or a comment or needs some clarification, I hope this can be as interactive as possible, you know, running through the chat itself. So please reach out with any questions really throughout the presentation or after the fact as well. I'm happy to have follow-up conversations with anybody who wants to dive in a little bit deeper. So with those sort of caveats out of the way, let me see if I can get this flipped to the next one. Yep. So I'm Brian Nottingham. I'm a senior director. I lead our research, evaluation, and community impact team, which is a mouthful. It's really the research that goes into anything. My background is I was the state LMI director for the state of South Carolina. That was a position that I held for almost 5 years. So I oversaw the state's BLS programming across the 4 data collection platforms the Bureau of Labor Statistics uses, and also oversaw the business intelligence aspects of our internal reporting and action plans for the state of South Carolina. Prior to joining TPMA, that was the role I held. Before that, my work was in workforce development. I've worked as an administrator for a local workforce development board. I've sat on local workforce development boards. And to really date myself, if you go back before that, I spent almost a decade in academia. So it's really great to have an opportunity to talk with everybody today. And I just, like I said, I sort of kicked it off and said, there's a lot to cover here. There's a lot of really complicated topics. It could be complicated, but in general terms, as far as what we're trying to accomplish today, just want to talk a little bit about the role of impact assessments and how they can be utilized and deployed in communities. I want to talk a little bit about some of the data sources. This is one part art and one part science. So of course we have standard data sources we can use, but really we're happy to pull in data and resources from any type of independent or inside or internal database, depending on the question at hand, to use as well. Of course, the one thing that sets us apart at TPMA that we're very proud of is really being able to transform data into strategic action. We do have several PhDs on staff, and we've got a few more EdDs on staff as well. So we've got people here that really have the academic bona fides to do really good empirical, powerful, academically valid research. But sometimes what gets lost in the mix in the pure academic work is sort of the practical implications. And that's something we pride ourselves on. We bring the rigor and the sophistication of this academic approach, but translate it always into strategic action. What happens? What are the real implications of this? And how can we move the needle moving forward? We're going to talk a little bit about some of the tools and methodologies. Again, there's a lot there. We're very customized in our approach. We can deploy a wide variety of tools and analyses to answer whatever question might be at hand, but we'll touch on those a little bit as well. And then also I want to talk just about a couple examples. Case studies might be a little bit too generous here. I think I just pulled out some key points and some key examples for some really interesting work that we've had the privilege of doing here in the last 6 months or so. So I wanted to make sure they were timely, make sure they were up to date, and make sure they were relevant to what we talked about. So when we talk about impact assessments, again, they can cover a lot of ground. They can accomplish a lot of things. It really depends on what the end user's looking to get out of them. Now, the work we've done has run the gauntlet on really from projects. And this is the one that I think most people are most familiar with, the idea that we're going to open a we're going to open a semiconductor factory. We're in the running for it. Now we've got it. We know it's coming. It's bringing whatever, 1,200 jobs. What does that mean for our community? That's really the run of the mill sort of impact assessment, which is sort of standard fare. So we, of course, do those as well. We also do a lot looking at programming. So we've evaluated sort of programs on the workforce. What have we done to get people back into the workforce? What's been the economic impact of that? Another example, of course, is we've looked at some benefits opportunities. Oftentimes we talk about the benefits cliff. What happens if we move the eligibility level perhaps a little bit higher to encourage people to continue to move along the career progression and not have that hard fall off on those benefits? What does that mean for us? What does it mean for our budget? What does it mean for our state coffers? What does it mean for the workforce? What does it mean for local communities? So we've dug into that as well. Population change is another one that we dig into. So again, this has been the topic du jour. We've presented on sort of the population change and really the lower birth rates, which started pre-COVID, but sort of accelerated through that process as well. So if we forecast out, what does the workforce look like in 10 years or 15 years, in 20 years, 30 years? Now it gets very, very precarious. The further into the future you go, of course, and that margin of error broadens quite a bit. But that is some work that we've taken on as well to say what's going to happen to us. What is the economic impact for population decline? Or even on the flip side, what happens if we return people to the labor force? We've done some work with that as well. Look, we know our labor force participation rate is not great. What does it mean if we increase that by 2% or 3%? What does that mean in dollars and cents for the community, for the employers, ultimately for the state in terms of additional tax revenue and sometimes communities as well and the tax revenue they're able to generate? So we can look at all of that as well. Programs have been great. Policies are fantastic. We look at a community in general as something else we've been able to do, where we kind of take a look at, okay, what are the goods and services in this community and what's missing? So we start talking about inflow and outflow of goods and sales and services. Well, perhaps 80% of the sales in a given industry are taking place outside of a county. What does it mean if we attract 3 or 4 new businesses to fill that void, keep those dollars in the community? What's the broader impact? And we've been able to look at those as well. So really, that we're just limited by the creativity of really the team, which I'm very proud of. I don't think we have any shortage of. We have the practical know-how to really run the empirical side of it for sure and put those numbers together. But of course, it's always driven by our customer or by our partner and what it is that they're looking for. So we've had a lot of really unique challenges brought to us over the years, and I've been very proud of the work we've been able to do to address those. So several things that I just kind of want to mention right off the bat, in addition to this sort of general collection that we'll talk about in a little bit greater detail in some of the other slides, is really there's not a limit and the data keeps coming and coming and coming. So we can look at cool things like foot traffic. I'll talk a little bit about Unicast or Placer AI data a little bit later on that we can kind of pull in. Like, what's the foot traffic? What are the tourist dollars? How many more nights and hotels are being generated by this event or this series of events? These are all fascinating economic impact things that we can get after now. I mean, it's a little bit scary sometimes to think about the data that is at our fingertips. And of course, we all have these little roving computers in our hands that can track us pretty much all over the country and tell where we are. But there's firms that are able to sort of harvest that data, and we can apply it to really get a good idea on what the economic impact of an event or a specific business, foot traffic, all of those things could be. They do rely on logic. I want to point that out. My team, I don't know if any of them have joined today, probably not, because they've heard this pitch from me so many times. But one of the things I say to them often is we're going to logic our way through it. We're going to apply our understanding of the facts that are known, and we're going to use those to extrapolate and make some valid, defensible assumptions about the facts that we don't know. So again, the logic and the creativity. And the one thing I really want to emphasize, which I think we have the best customers in the world, I've yet to come across one that doesn't really understand or embrace this. But when it comes to studies like this, when we talk about the economic impact of a program, a policy, an initiative, a new business, a new venture, moving the needle on the workforce, the folks that commission us, of course, have a vested interest one way or the other. Usually they're trying to advocate for some change by highlighting the dollars and cents that will come back in. However, what makes our studies powerful and really help move the needle for everybody is our objectivity. And I think that our customers understand that. And it's something I'm very proud of. So we always want to look for what could be there, but really when you're trying to convince stakeholders or investors or the state legislature to really invest dollars or try to move the needle on a program or a policy or convince a new business to come to a community, they value quite a bit the independent assessments that we do. They really like the third-party nature of it. They know that the methods are rigorous, and they know that we're not cherry picking or trying to prime the pump to produce a result that is, of course, in the interest sometimes of the customer. So it's something I just like to point out and get out of the way, so that we're all on the same page there. Now, on the back end, of course, I've touched on some of this in general, and since you're participating today, you already understand the value of the numbers and the empirics that sort of go into it. So the idea that all of this should really lead to informed strategic planning, informed decision-making. There should be something on the back end, right? It's the old carpenter's adage, right? You're going to measure twice and cut once. That's what we're going to do. We're going to measure, we're going to estimate, we're going to verify, we're going to vet. We're going to go through it again and help that to inform really the cutting that takes place on the back end in terms of development of new policies or strategies or implications. So those are some of the big things that we kind of lean into. Sustainability is another one that we've come up with lately. Like, what do we need to do to be sustainable? What does our economic impact have to be? What is our return on investment, which is really a very unique subgenre of an economic impact study, which we've done quite a few of as well. So in terms of the really more specific ones, there's three categories, and I love that, really we blend all of these when we work on a specific project, work with a specific customer, or work with a specific community. The first sort of general bucket that we talk about quite a bit are the economic impact assessments. And me being a quantitative guy leading up the sort of research team, this is where I do a lot of my work. Now, it's only part of the puzzle, and I would point this out as well. The other folks on my team, we have very adept qualitative researchers as well. And one of the strengths of our projects is we marry those two approaches. If you went to grad school, and I don't know, in the last 25 years, it was always that quant versus qual debate and jokes about this, jokes about that, rigor and not. And I'm here to tell you they both have their merits. And they both are stronger together. So we really focus on including even in these hard number economic impact assessments, we always include some sort of qualitative flavor, whether it be a small case study or perhaps it's some focus groups to vet the data that we're doing. We love to do that. We love to triangulate and sort of cross-validate findings and data. The data in and of itself is powerful, but it's important to have it vetted with a series of stakeholders, important to have people add some perspective to it, what may or may not be going on. So I just wanted to mention that as well, to make sure that we understand that really we're not married to one approach. We'll bring all of them together. But these economic impact assessments are the most traditional of them, and these are the ones that folks are probably most familiar with. And we talk a little bit later on about Lightcast and their IO, input-output modeling, and InPlan, which is the software package, our software package of choice. We use it a lot. InPlan is a very sophisticated input-output modeling software package. Developed, believe it or not, by the U.S. Department of Agriculture some 30, 40 years ago. I'd have to look the date up. And it's since migrated to, I think it went to the University of Minnesota for a while, and it's sort of in the public sphere now. So it's a subscription service. But fascinating work that was done. And I could spend probably a whole hour talking on the history of that. But I don't think anybody would be interested in that other than me. Just know that it is a tool that we bring in. Now, again, this is really where the rubber meets the road for a lot of them. We do a lot of these for government agencies. We do it for government agencies requesting money from the legislature to say, if you were to give us X number of dollars to do this collection of services or programming, this is what we estimate the economic impact would be on the back end. So a great example of that is moving the needle on labor force participation rate. If you improve the labor force participation rate across the state of Indiana or Kentucky, South Carolina, or anywhere by a set percentage, what does that translate into and people back into the workforce? What jobs will they be taking? What does that mean in additional gross revenue produced? So gross regional product for the region. What is that going to crank out? Also, what are the wages, salary, and benefits, of course, the workers are going to get? And on the back end, what's usually most convincing, especially when you talk to funders of the legislative variety, is what are they going to get back in taxes? What kind of state income taxes are going to be generated by this? In addition to taxes on production and import and all these other ways we can sort of slice and dice economic impact. Nonprofits, again, same idea. We've done quite a few of these for nonprofit organizations that are pursuing additional funding from the legislature, and they want to sort of highlight what it is that they do, why it has a good impact on the state, what return on investment it has, and justify, you should probably give us some more money that we can invest and move forward from there. Great example of that is some of our work on the child care challenge across the country. We've done work now in, I think, 4 or 5 states on the economic impact of not having parents in the workforce because they cannot afford childcare. And that gets a lot of people's attention. That when you put that into hard dollars and cents, you've taken sort of something that's maybe kind of a social issue, in that, you know, if and again, I've got grandkids, but I don't have any children, and perhaps it doesn't impact me personally, so I don't think about it so much as top of mind. Like I think it's unfortunate, it's a challenge. People can't do this, can't do that. But when you can put the dollars and cents behind it and say, look, this is what it's costing us. It's what it's costing our communities, our economies, what it's costing in terms of additional benefits when folks aren't making enough money to make it on their own and they have to tap into public assistance of some variety. So putting those dollars and cents behind things like this to really justify investment and expanding childcare capacity and getting more parents back into the active labor force is, of course, another really, really important aspect of these. Businesses, of course, we use these for a lot of businesses. They want to know what their economic impact is on a region. Sometimes they want to know what the region's economic impact is on them, what they're doing on their ability to do business. And this is when we dig into things like differential tax rates. What's the corporate tax structure look like? What type of incentives might be available? What's the clawback that goes with it? And we're really able to compile for some of our private corporation customers, really able to compile the pros and cons of relocation to a series of sites. It's a very competitive market. And of course, they get a lot of good information from state economic developers and very rigorous, and we work with them as well to make sure it's solid and tight and that it's conservative and defensible. But sometimes these organizations or these corporations, these private businesses would prefer to just do their own. And again, with this idea of objectivity, and they can sort of kind of help define and drive their decision-making process moving forward there. So again, attracting investment, showcasing economic investments. We've done this for a lot of communities. If we were to attract this semiconductor plant, this would be the economic impact on the region in terms of jobs and earnings and tax revenue. Quality of life is something else we'll get into here directly. But we do this a lot too. And of course, this is used to help build incentive programs, justify and explain to decision makers that might have control over the purse strings to incentivize either at the local or state level, something to attract and retain these new businesses. In addition to that, we've done quite a bit of work now with social impact assessments, which is a really, really nebulous category. So again, we start thinking about quality of place and the factors that make a community appealing. What is it? What does it do? What is the impact on sort of satisfaction level within the population itself? And we can triangulate that with a lot of public available data. And again, we lean into surveys and focus groups to try to talk to people on the ground in these specific communities in which we're working to try to understand what it is it means to them. So again, focusing on things like well-being and health, education. Equity is a big piece of our work as well. We dig in a lot on that and sort of equitable solutions and sustainable growth. What does this mean to have a thriving community? Now, what the impact is on the back end, again, I sound a little bit like a broken record. It depends quite a bit on the nature of the project itself and what it is we're trying to accomplish or what the customer has hired us to try to accomplish. They're used a lot in sort of, again, business attraction to sort of showcase the amenities, the quality of life, the intangibles. Now, of course, part of that, they'd want to look at, interstate transportation systems, railroads, things like that, the nuts and bolts of operating a business. But let's not forget that some of these big businesses, especially if they're not a remote work environment, they're going to bring lots of people in. They're going to hire some of your citizens, bring some of their own. A lot of them are competing nationally for top tier talents. And the ability to attract them to a place that really is high quality, has a great sort of living index, quality of life, social impact, all of that fun stuff is sometimes a decision maker. They want to keep their people happy. So we're seeing more and more and more of those to kind of understand what that is. In addition to that, we've done some work with housing authorities. We've done some work with mental health providers, service providers, statewide agencies to really look at the impact of their social programs and initiatives. What are they doing to improve the lives of people? Now, some of that could have an economic component to it. Again, getting people stable housing so then they can pursue a job and they're going to exit the public benefit roles. All of those things, there's always some dollars and cents attached to it. But a lot of the really important work, especially for some of these social programs, isn't necessarily measured on a traditional return on investment, but it's the number of lives that can be enhanced. So this could be things like improving, reading scores within a community, both at the adult level and also within within K through 12, within the secondary and under schools as well. What does that mean? What is the impact on that for our community? Done some really interesting work in some communities looking at the impact of third grade assessment scores on sort of future productivity within the region. And again, drawing in data from myriad sources. The Bureau of Labor Statistics puts out a great productivity series that sort of gauges that. And you can tie that back sometimes to educational standards, educational attainment. Personally, I don't like to I don't like to think that somebody's path is set by third grade, and for sure there's time to intervene and things can change, trajectory can go in a whole different ways. But it has been shown to be a powerful indicator in a lot of examples, and not just from our research, but from the national body of literature as well. So again, that's really another aspect of what we do. And again, looking at corporate responsibility, looking at the social return. This could be things like a community garden. What does that mean? If we put that in, of course, it's gonna provide some food sources, but what does that mean in terms of community engagement? There was a famous book written, I'll date myself now, when I was an undergrad in the 90s, Robert Putnam, a political scientist, wrote a book called Bowling Alone that really talked about the breakdown of bowling and civic organizations in the United States. Membership has just really, really gone down in a lot of these civic organizations. Now, what is the impact of that? Well, again, we're feeling more and more isolated, more interactions on our phone and sort of the echo chambers and social media, all those things that go with it. Like we're seeing some deleterious effects of sort of some of this breakdown of social connection. So in terms of a social impact analysis, if we build this back up, if we put the framework in place to encourage this social connectivity within a community, what does that mean for us? What's going to happen on the back end? So that's something else we like to dig into as well. One of the other ones that we've done some work on are environmental impact assessments. I've mentioned implant software modeling a couple times now already, and I'll talk about a little bit more later on too. But it does some really neat stuff in estimating the environmental impact of initiatives as well. This could be things that, this could be a good or a bad one. So if you put in a new blue hydrogen plant, or you focus on carbon sequestration and reducing emissions, and you invest in a project or a plant or a factory that is going to address some of these things, it can bring down the levels of toxins in the environment. It can bring down the demand for some of the fossil fuels. And we've got good ways to estimate all of that. On the flip side, if you open up a huge energy producing coal-fired, electric plant, you're going to produce electricity, but there's going to be some environmental impacts as well. So we can dig into that to kind of get an idea of what this might be. Closely related, we've done some interesting work on climate charters and climate policies. And we've looked at it really from both sides, because there's costs and benefits really on both sides if you look at it that way. If we're going to turn our community into a green community by the year 2035, what does that mean for us? What's the economic impact in terms of potential jobs lost? Will that be offset by the jobs that we're able to gain in this sort of new eco-friendly industry that we're trying to create there? So we're able to look at that as well. And even when it comes to putting in policies, a climate charter, things of that nature, there's labor involved, there's manpower hours, there's new tax revenue that has to fund it, there's staff that need to be paid for. We can take a look at all of that, and so that there's a real clear understanding of the costs that are involved on both sides. And we don't necessarily need to even take a position. It's not a zero-sum calculation where, okay, if the costs outweigh the benefits, then we're done. I think that a clean environment probably has intrinsic value in and of itself that should be accounted for. So we're always careful to make sure that we note that too, and the limitations of what we can do. And again, we've worked with communities that are looking at those charters. We've looked at energy companies that are looking to increase their sort of social responsibility, reduce their carbon footprint. What does that mean? Would it relate to job loss? Again, would it be a wash with sort of adding in these new folks and these high-tech, green-focused energy jobs? All things that we really, really, really like to look at. So, all right. So other than those three general varieties, there are some other, I guess, sort of general housekeeping stuff that I just want to make sure I expose everybody to as we talk through it. Talk about some key terms, tools, and techniques. The first one, which is probably familiar to anyone that's done any of the rudimentary input-output modeling and Lightcast, which they do have. It's very straightforward. You just need to enter the industry and the number of jobs, and they spit out some numbers that give you some measure of these. As I've indicated, we get a little bit deeper and more sophisticated with the in-plan software that we use. And of course, our own ability as researchers to interpret, analyze, and extrapolate from the hard numbers that are there. But they always look at these three general categories when you start talking about adding jobs, taking away jobs, increasing sales, reducing sales, which is something else I should mention as well, that we do some of these economic impact analyses on things that maybe aren't so good. There might be a facility closing. It could, run the gauntlet from, perhaps a corrections institute, a hospital in a rural community, an old factory or a plant that's been there forever, that's shutting down, it has a warn notice, all that stuff that goes with it. So we can assess that as well. It's not always about adding value. Sometimes we're trying to make a case and get them to understand that we think this plan through and how we're going to help on the back end, because events can have a negative impact on the economies of a region as well. But nonetheless, these concepts, the direct, indirect, and induced impacts are consistent across those. And again, just in a nutshell, the direct impact is really, sometimes it's called the initial impact. I think that's what Lightcast labels it. But the direct impact is from the event itself. So if we open a new semiconductor factory, let's just stick with that example, and we add 1,000 jobs, the direct impact is the result of those 1,000 employees, the wages they're going to earn, the taxes they're going to pay, and the essentially goods or services that they're going to produce on behalf of this semiconductor. That's the direct impact that can be tied right to a business, an organization, a program, an entity itself. So we've done this and looked at, for example, fellows from different academic programs where they offer fellowships and they do stuff to recruit and retain people in the state. We can look at really their distribution, the jobs that they get when they're done, what those earnings are, what that tax revenue is, what the gross regional product contribution that they're able to put together is. So that's the direct impact. The indirect impact, sometimes referred to as the supply chain impact, is exactly that. If you're a semiconductor factory, you're going to be buying goods and materials and services from other businesses, some within the region, some without, and we're able to sort of isolate that and understand what the regional economic impact is. So the indirect impact is first and foremost, the value of the goods and services that are being produced by these suppliers, that are being purchased by the direct industry, the semiconductor factory in this situation, the wages, earnings, and benefits that are paid to the employees at the supply chain. And then, of course, the supply chain generates tax revenue, tax on production and imports, property tax, sales tax, all of those things which flow back into the government's coffers in one way, shape, or form. And again, that's part of the broader indirect impact of an initiative. The induced impact is one step below that. This is what happens when the employees from the direct industry the semiconductor factory, and all its suppliers take those paychecks. They go out to eat in the community. They go to shows. They buy houses. They go to the race cart. They go to the racetrack. They buy shoes and books and services, all within that community as they spend their dollars. So again, that's an important impact as well. It's the induced impact of folks in the direct and indirect earnings categories spending their money and spending their dollars in the community. The one analogy I use quite often when we talk this through with potential customers and customers, it's essentially akin to throwing a rock in a lake. You throw that big rock in the lake, you get that first splash. That's your direct impact. Now the waves ripple and go out from there. The first big ripple, okay, that's your indirect impact. And as they approach the shore and sort of trickle out, that's going to be your induced impact. It's very important that you account for all three of those to get a good idea of what's going on. Now, the other ones, and again, I appreciate that, I don't have all day, as you can tell. I'm passionate about this. I could talk all day, but I do want to move along a little bit more expeditiously. So let me just hit a couple of these. The value add is almost akin to the gross regional product contribution. InPlan calls it the value add to GDP, gross domestic product, which is technically GDP is usually used for nations as a whole. GRP is really these sub-nation units, a state, a county. But regardless, I won't quibble over that. But the value add is akin to gross regional product. That is what value is added to the region's gross domestic product by these industries as a result of this expansion. That's great. Okay, great. Thanks, Stephen. All right, great. Some of the other stuff that we talk on, and again, this would vary from project to project, but a common one that's thrown out is the TOPI, the TOPI, tax on production and import. Is exactly what it sounds like. This is calculated separately as part of the modeling. So when a supplier buys lithium from wherever, if it's imported, there's a tax on that. If they are, if there's sort of something they need to offset in terms of incentives that they had received, they need to pay back, that would fall into that as well. In addition to the TOPI, we can dig down to the sub-county level. So this is like school districts. School districts get some sort of tax revenue from both employees and employers that can be traced and affiliated with that. County taxes, clearly. State taxes, which typically includes the income tax, as well as a portion of the TOPI. And of course, the federal taxes really is not much of an interest to a lot of our customers. We've done a little bit of work with the federal government, but typically we're dealing with states and sub-state agencies. So the feds are going to get what the feds are going to get. They're largely interested in sort of the state impact as well. Earnings, wages, and labor income is another important component of what we evaluate. I just mentioned labor income. That's a very specific term from InPlan. Earnings is straight from the Bureau of Labor Statistics. This is what people are usually familiar with. This is how much you make. So if you make $120,000 a year, that's your earnings. That's what you're getting in your paycheck. You're not getting all of it. That's what you're going to make before taxes. But those are your earnings. Those are your wages. Earnings include both wages and the benefits paid by the employer. So the employer pays part of the health care, sometimes all of it if you're lucky and you got a good employer. They contribute to the unemployment insurance, of course, on your behalf. That's part of it as well that they're gonna kick in. And anything else that goes with it, a health savings account, retirement, 401k match, anything like that would all be rolled into the larger earnings. So again, I mentioned a couple of these in passing already. The Lightcast IO modeling, input, output. It calculates the very basic level, this direct, indirect, and induced impact. InPlan, I touched on already. Wonderful software package, one that we're really happy to use. And it gets really into the weeds and some of the detail there. And one of the other ones that I just wanted to mention was the location data. This comes in quite a bit, especially when you're evaluating an event. We've evaluated sort of tourist season across regions in the South that have identified, we could really even get down to the interstate exit to track the traffic on and off that exit during the months of June, July, and August. We can get location data at the entrance to a national park. We can get location data. We've looked at, individual studies in different regions. For example, wanted to talk about cannabis lounges, and we could take a look at what's the foot traffic at this cannabis lounge, what is the revenue it's bringing in, what all goes into that. So it's fascinating. It's a brave new world. It's something we've leaned into and we've been able to use quite a bit. This location data really helps, especially with that event analysis, whereas Implan and Lightcast are really focused on the industry and the jobs. Implan's got a little bit more flexibility with some of the event planning, but really looking at those events, we have to lean heavily on some location data to estimate how much folks are spending within a community while we're there. Great. So, okay. So here's what those look like. And again, this was a project that we've done. We just completed recently. It hasn't been finally approved yet, so I can't share the customer, and they need to vet and all of that stuff too. And the design is my very basic design. I'm a data guy, not a graphic designer, so this is usually what my work looks like until the product is finalized, and then it gets all prettied up and spruced up. Steven and his team do a great job of all of that. So, but this is an example of the direct, indirect, and induced impact. And this was for the operations of an entity. And this was within the state of Indiana, but we were focused on a specific MSA, Metropolitan Statistical Area, which is another important point. You can run these impact analyses really at a very finite level. This MSA, they go out to a county, they can be a collection of counties, they could be the whole state. And there's going to be ripple effects throughout all of that as well, which is part of what we go about. Oftentimes we're asked to estimate all of them, which can get a little bit tricky, but we've got a really good process to isolating that MSA out to the county, out to the region, out to Indiana, or any other state for that matter, because we don't want to double count anything. But this is what a basic table looks like that comes out of it. You can see the employment in this situation. This organization employs 3,700 people. So that's their employment on the direct line. Those folks make 126 million, 126.2 million annually in terms of their labor income. Based on that work, they're able to add an additional 30 million, 30.6 million to the gross regional product in the form of services and products that are then sold to the community at large. Now, this is an important thing, and this is an extra step we take. If you look at those last two rows, the first one says value added, and that's the contribution to GDP. That's exactly how the model spits it out. But it's important to note that the GRP or the GDP, people often think of it as sort of the goods and services produced, but it also includes the wages that are paid to the workforce and the earnings of the proprietor. So what we like to do is take out the labor income and then isolate the value add. And that's what you see in that last column there, the 30.6 million number. That's a portion of the value add that's reported in the next to last column on the right, which also includes the earnings of workers. But again, we follow this logic through, and you can see the indirect and the induced, same process. These are the number of full-time equivalent jobs that are being created by the presence of these 3,716 people in the industry under evaluation, and everything that flows from there. Here's an example, again, operations and expansion. These are the taxes that we talked about. Now, listen, we can get into crazy detail if anybody has an interest. In fact, it drills all the way down, even in the industry code, when we start talking about the indirect, that is the supply chain component. If we enter an industry, enter their employment, enter their payroll, we can estimate which specific industry subsectors, and I'm talking down to the 6-digit NAICS code, we can estimate what they're getting out of it. How many jobs are being created at the local HR firm? How many jobs are being created at the local office supplies producer? How many jobs are being created at the local, whatever, plastic processing facility? We can get into that level of detail, which sometimes the customers want. But we can really tackle that and dig down into it and really tease this out. It can be overwhelming. So we try to report to this high level and then drill down. Oftentimes an appendix is necessary. But it's the same with the tax levels too. We can get even more detailed on what these taxes are going to. School district, local fire tax, things of that nature. We can drill all that out. We can figure that out. But sometimes it becomes overwhelming, and really the trees make you lose sight of the forest. So this is an example of that. We've got the sub-county general. So this could be like a town or a municipality. We've got sub-county special districts. This would be like a school district, for example, the county government itself, the state, onward to the federal. And then, of course, in the last column, we sum all of that. And as you can see, this can be broken down along these same categories: the direct, the indirect, and the induced, summed up to the total government to make that case. Here's another example of one we just worked through. We talked about labor force retention. We had a wonderful privilege to evaluate a program that really worked hard to keep college graduates within the states. As you know, and again, this could be from any state in the country, retention is a real challenge for some regions, some areas. You're producing a lot of talent, but after they graduate with that four-year degree or their master's degree or their PhD, where are they going? So retention is a big deal. I will say this program was really, really impressive in that the state average retention rate, which is a whole other symposium, I'm sure, but you can get that information from the post-secondary employment outcomes data, wonderful products put together by the U.S. Census Bureau that really tracks earnings and flows of college graduates, done in concert with councils for higher education, state unemployment agencies, all of that. It's a powerful, powerful program. But the average typical retention rate, it varies depending on major, but really it's in the neighborhood of 10 to 25%, depending on the major and the level. As you move up the ladder from sort of a credential to an associate's degree, a bachelor's degree, that retention rate goes lower. But nonetheless, if you figure 25%, that's not a great retention rate, but that's what most communities look at for these graduates. Now, this organization was retaining about 60% of their fellows in the state after they graduated college. So that's amazing. That's impressive. And that was really the story we were trying to tell with this. So we're able to track down, excuse me, again, through survey, LinkedIn profile scraping, outreach, sort of coordination with our customer, our partner in this, to try to understand which industries these alumni were working in, where they were located, and what their job title was. Based on that, we can marry them up to an occupation code, the Standard Occupation Classification Index, again, Bureau of Labor Statistics product, figure out a median income, and then estimate, look, this is what their earnings are based on the job titles they gave us, where they're located, the industries they're working in. In this situation, these 243 people, $37.9 million in earnings last year. And again, isolating these industries, and some of the other examples I talked about one industry, but implant is so powerful, you can attribute these people across a series of industries and run one analysis. And that's what we did here. Generated an additional 241 supply chain jobs, 16 million in earnings. Induced industry, again, and as fate would have it, same number, 241 jobs, 13.9 million in earnings. So again, really cool stuff where we can kind of take the traditional economic impact analysis as people understand it, that is adding a business or retaining a business, and we can kind of stand that on its ear and take a close look at individual level retention across a wide collection of industries. So again, work I was real proud of. One of the other thing we looked at, and again, this is from a region in Kentucky, I'll even name drop them because they've already released it. They're happy with the work that's out there. This is from the Lincoln Trail Area Development District in Kentucky. Some wonderful work we did with them. Great people. Took a look at the child care challenge in the region. That is, as with almost every other community in the country, looking at serious child care shortages. So how many parents aren't able to work in this community because they can't access childcare? Again, this is a topic for an entirely different webinar. We have really powerful, great proprietary methodology we apply to estimate that, which has been vetted and we update it regularly. It's been fantastic. But when we applied those methods, we were able to identify 2,035 what we've called work-willing parents in this community. And all that means very simply is they want to work, but they cannot because they don't have access to childcare. So when we take those 2,035 work-willing parents, excuse me, we distribute them in a couple different ways. And that's what you see here in this culmination. One approach is we say, okay, they're going to mirror the current industry distribution in the region, which we've called the mirror model. Again, I don't know that I'm great at naming models, but that one seemed pretty intuitive. The mirror model. So what we're going to do is take a look at the current distribution of employment in the region. That is, what jobs do people have? What industries are they working in? And we're going to mirror these 2,035 people. Again, logic our way through it. We're going to use ratios. We're going to divvy up these 2,035 people across a collection of industries. Excuse me. And then run the impact model to generate, okay, all of the things we've talked about. These are their earnings. If they distribute themselves across the industry in a way that mirrors what's already in the region, this is the blue side. These are their earnings. This is the tax revenue that's going to be generated. This is the gross regional product that's going to be produced. And here's the very special sales, import, and property tax information that's going to be generated as well. On the flip side, on the yellow side of it, we had a really, really great partner, and this is something else I love about TPMA, and we pride ourselves on working collaboratively with funders and with people that they're really vested in interest in it. We had some great suggestions that came out of this group and said, well, you know, that mirror model is good. It makes sense. However, could you consider the possibility that perhaps if these folks could mirror the employment opportunities that are here already, that is, I think the median income was 60 grand or something like that. Like if they could get $60,000 jobs, paying for childcare probably wouldn't be as important. Now, we could argue that, but let's just assume that to be the case, that really perhaps this is biased towards parents that perhaps don't have those skills to get that job as the engineer or whatever it might be to really offset the cost of going back to work. So they could be more in service industry, sort of lower paying jobs in a lot of situations. So what we did on this right side that you're looking at, the yellow portion of it, is we called it the downward adjustment model, where we said, okay, again, applied our proprietary methods, reassigned these 2,035 parents weighted them heavily into industries and occupations where the rate of pay was probably below the median for the region, and then re-estimated what that economic impact would be. So what was produced here was ultimately a range where we're able to say with really a good degree of confidence, this is probably the high end, this is probably the low end, and the real number is somewhere, of course, in the middle. Excuse me. And you can see that's just the companion graph that goes with this. That is our mirror versus downward adjustment model. That's my very feeble attempt with that red line to draw a bell curve. Those of you that are familiar with that, plus or minus 2 standard deviations from the mean. All right, again, I don't give anybody methods or econometrics sort of flashbacks, but that's what that is. So that would be a normal distribution. If you expected people to distribute normally across the region, this would be the jobs. Now we know that's not ever the reality. So what we did to juxtapose that is we plotted the earnings by category with the yellow, which is skewed to the left, that's downward adjusted. And of course, the mirror model, which skews a little bit more heavily to the right to sort of justify what we were doing there. So, all right. So again, there's really a lot to do here. There's a lot to get through in this section. And I'm afraid that I've spoken to the point where we're about out of time. So let me jump into some obstacles and solutions really quick, and then we can open it up for a little bit of Q&A if anybody has any, and of course, be able to drop my name. Stephen, if you could do that while we're doing that, that'd be great. Drop my name and email in the chat. And if anybody wants to reach out to talk one-on-one, I'm happy to do that, very happy to do that. So some of the things we run into that we have to deal with, and you're going to have to deal with as well if you're thinking about taking on an economic impact analysis, data availability and quality, that's always an issue. Again, we use a variety of sources. That's our solution. Again, I mean, I could stand BLS data on its ear, so we use that a lot. We focus on labor market information from your local state shops, which is similar, but sometimes more refined and a little bit more useful than some of the stuff you can get from the Bureau of Labor Statistics. We rely on that as well. Also, we use public databases, like for example, for the child care impact challenges that we're looking at, we look at live birth records to try to get an idea of the population. Lots of software programs will estimate the age of the population. However, we can get really close with, if we get into the live births, we can really get down into it and figure out how many kids are in the region by age group. So again, we just try to triangulate and really look across multiple sources to cross-validate, make sure the information is 100% correct. And we have to have some simplifying assumptions. And the one thing that I'm big on, and again, my team is so sick of hearing me say it, is it has to be properly documented and footnoted, annotated. Source Limitations, we deal in transparency. So if there's a weakness to any component of the data, I want to point that out. I don't want to wait for somebody to be asked me. I want to get right ahead of that and say, this is the story. These were the limitations. This is how we've gone around it, and really put together a defensible process for that. Now, one of the other things that we run into is sometimes defining the scope and the boundaries can be a little bit challenging. Sometimes you get folks like, well, it could be anything. It could go from there. We want it all. Well, that's not really helpful. So we kind of have to, we work through that together to say, okay, what do you think the economic impacts would be? What is it that you're looking to get after? And this can be really challenging sometimes when we talk about some of the social impact analyses, like how do you define happiness? It's a great question. Varies from person to person. I mean, there's certainly community indicators we can get at, and sometimes that's what we do. We kind of identify proxy measures. We look at whatever addiction rate within a community, arrests. Even some of our customers have looked at obesity rates as an indicator of health and well-being, which they are to some extent, obviously. So we can really triangulate this again with supplemental data. Sometimes it has to be proxy sources. You can't always measure exactly what it is you want, but we can make those linkages in a defensible way. And we draw on the academic literature quite a bit here to justify this, really make sure it's referenced, point to other rigorous studies that have used the same process. Again, we're academics as well, so we're not shy about using previous studies or work by other consultancy firms. And it's really great. Like, we recognize that high quality work that can inform and improve our process is something we want to use. And we know, because we've seen our methods show up in other consultancy firms as well, they do the same. So it's a good thing. It's a good thing because we're trying to get the best answer and solution for our customer. And sometimes that means that we have to put our own egos aside and look at what's been done before and be willing to improve our own process if necessary. Predictions and constraints, of course, I've touched on some of this already. Always uncertainty. We try to add an error band as well when we can. Sensitivity analysis to see, okay, how sensitive is this to every factor or every variable that we load into it. Sometimes these economic impact analyses are paired with multivariate regression analyses as well to really identify some of those drivers at a statistically significant level, and also the general scale of them and the magnitude of the impact that they have. Time and resource constraints, that's always a problem, especially when you consider some of these other ones. Not always a problem. It's always a consideration. If you want something very specific and the data is tough to get, or we have to collect it, then sometimes that takes more time. Now, we pride ourselves on hitting deadlines and turning things around quickly, so we're willing to really, burn that candle at both ends and burn the midnight oil, whatever analogy or whatever slang you want to include there, to make sure we get it done. But we always try to make sure we're very clear on this is a lot of work. It's going to take a lot of time. This is what's realistic. What do you need? How quickly do you need it? We do a lot of sort of interim reports and sort of, I guess, mile markers along the way. Some of the data I shared earlier is a good example of that. They had a hearing which came up very quickly with the state senator, wanted to talk about, or meeting with the state senator, wanted to talk about this. It came together quickly. It was a full 2 months before they knew our final deliverable was going to be ready. So we pulled out some high level stuff, put together a short synopsis to help them address that immediate impact while we continue to drive along and get all of the details in order for them. So, all right, bias in communication. I think I've touched on that as well. We are very rigorous in our approach, and that is one of the big benefits of hiring TPMA. We're going to guard actively against bias in both data collection, data cleaning, and sort of a subjectivity in wanting to see what the result is. We're going to make sure it's rigorous and defensible, and ultimately, we are always willing to stand behind our work and defend it as necessary. All right, so with that, we do have 6 minutes left. I'm happy to open up the floor to any questions. I don't know if anybody has anything they want to drop in the chat, and we can kind of go from there. All right. Well, I didn't see any of your faces, so I'm hoping that you're all still awake. So I hope you enjoyed this really brief overview. And of course, if you'd like to have a one-on-one conversation about a specific project that you're thinking through, or just have some general questions about methods and impact analyses. I love to geek out on data anytime I can. So please reach out to me directly, and I'll be happy to set up a meeting, and we could talk one-on-one with any questions you might have. So with that, thank you so much. I appreciate everybody's participation today.